Hi, my name is Brian Tully, Managing Director at Total Bank Solutions. And today I'm happy to be here with Mike Musial, Head of Sales for Securities-Based Lending at TBS. Mike, before we get started, would you please give us some info and some background on your history in the securities-based lending industry?
Yeah, thank you for the intro, Brian. I was at Merrill Lynch when the first securities-based lending platform was rolled out in the early 2000s. Fortunate enough to be on the distribution team there. And subsequently, I have rolled out lending platforms at most of the major wirehouse firms, including UBS, Raymond James, and Morgan Stanley. And now we're here at TBS offering that functionality downstream.
So, Mike, you've been in the industry for a long time. How did this asset class originate? And how do these credit facilities work?
That's a great question, Brian. Back at Merrill, they became aware of two converging trends. One was that high net worth clients were actually using their margin accounts for things other than purpose borrowing, for buying more securities. They're using them for convenience borrowing, for bridge financing, things like that. And at the exact same time, new investment vehicles emerged that were separately managed accounts where the assets were not held at Merrill Lynch. They were sent to money managers outside of the firm, which made them ineligible for margin. So they recognized there was a growing need and a large pool of assets that they couldn't actually get at. So they went through the bank and created securities-based lending. And from there, all the competitors got the idea, and it's become a very large business within itself.
So that makes sense. I hear what you're saying about margin. And I've often heard people confuse securities-based lending with margin lending. Can you explain the difference between the two and what an advantage of one might be over the other?
Yeah, I get that quite a bit, and they are very similar. There is some overlap between them. Uh, Securities-based lending is an evolution of margin, and there's a lot more flexibility built into it. With margin, the pricing is typically based on drawn balance as opposed to size of facility. So the pricing is better with securities-based lending. You can get a better release rate in securities-based lending. Margin is typically 50%, and you're limited to that. Securities-based lending can get up to 95, 98% on certain asset classes, so you get a lot more potential to borrow. And there's an inherent flexibility with securities-based lending that doesn't exist with margin. With margin, you can only pledge one account for a line of credit, and they have to be titled the same way. For example, if you pledge a trust account, the line of credit has to be in the name of the trust. With securities-based lending, you can pledge multiple accounts, and you can have multiple parties. You can have third-party pledgers. A wealthy grandparent could pledge an account for a grandchild, or business partners could pledge accounts for a line of business, for a line of credit for their business.
Well, there are some clear advantages to SBL over margin here, and I'm sure that's probably not all of them. But one final question, based on your industry knowledge, where has the growth of SBL come from? What firms, and where do you see SBL going in the future?
I think, like with most products launched in the wealth management space, you saw the early growth in the major wirehouses. Merrill was certainly the first mover, followed very closely by Morgan Stanley and UBS and Wells Fargo, and they even today comprise a very large majority of the outstanding balances. Then to compete with the largest wirehouses for business and clients and advisors, you see the smaller independent broker dealers looking to get into this space. And it's evolved into even breakaway RIAs that don't have an affiliated bank need some way to participate in this market to be viable in the marketplace. And that's where platforms that can enable software really are coming to the market to solve a problem that is very important for both firms and their wealth management clients.
Well, you've certainly given us a lot to think about here today, Mike. Thank you for your time. And if you would like to know more about securities-based lending, please feel free to visit our website at www.totalbanksolutions.com.